Hey there, welcome back to my channel, it's me the Injector. Today we've got some major news that could shake up the market, especially if you're watching NIO closely. Have you ever wondered if NIO might be turning a new page after months of wild ups and downs? Could a nearly $2 billion cash injection really fuel NIO's comeback and push it to the next level? Stick around because we're diving deep into what this means and whether NIO's recent surge is a sign of what's to come. Also, before we jump in, if you're into keeping up with the latest stock market moves and strategies, hit that subscribe button so you never miss out on crucial insights that could affect your investments. Alright, let's break it down. NIO just made a significant move by announcing a cash injection worth $1.9 billion from existing shareholders. This isn't just some minor announcement, this could be the boost the company needs. After all, it's no secret that NIO's been facing financial challenges for quite some time now. But with this new capital, their China unit is looking stronger, and this could help solve the company's funding concerns for the near future. Now, this announcement caused NIO's Singapore-listed shares to jump by almost 16%, and even in the US market, NIO's American depository shares spiked by 12.7% in early trading. But it's not just the cash injection that's moving the needle here. China's latest efforts to stimulate its economy also played a role in pushing NIO's stock higher. NIO's been burning through cash at a rapid pace, which had many analysts worried. In fact, NIO reported a loss of 4.5 billion yuan for the second quarter. But here's the interesting part. Despite those losses, their quarterly sales surged to 17.5 billion yuan. That's a significant boost, even though the EV market has been experiencing weakening demand overall. And speaking of the EV market, you know how competitive it's been, especially in China. NIO has been trying to outshine its competitors by investing heavily in battery swapping technology and expanding its charging infrastructure. But the question on everyone's mind is, can they keep up this momentum, or is this just a temporary lift? Here's where things get even more interesting. NIO has just launched its new family-oriented mass-market brand called Onvo, and their first model, the L60 SUV, has already started deliveries. The company reported that orders for this model were far stronger than expected. This could be a game changer, especially as NIO looks to challenge Tesla's dominance in the Chinese market. But let's not forget, NIO has already delivered over 128,000 vehicles this year, and their order intake is steadily rising. If Onvo continues to perform well, this could push NIO's sales momentum even higher. So, for those of you holding onto NIO stock, this might be the bright spot you've been waiting for. However, let's not get too ahead of ourselves. Despite the recent surge in stock price, NIO is still burning cash at a fast pace around $1 billion per year, according to some estimates. Even though they have about $5.7 billion in cash reserves, this rapid cash burn could become a problem if sales don't continue to ramp up. On top of that, NIO's been downgraded by some analysts in the past, and their current financials aren't exactly pretty. For example, their debt-to-equity ratio stands at 0.71, and they've posted negative earnings per share for several consecutive quarters. These are red flags that any investor should keep in mind before jumping in head first. Let's take a quick look at what Wall Street thinks. JP Morgan Chase recently upgraded NIO from a neutral to an overweight rating, and they've boosted their price target for the stock from $5.30 to $8. This is a pretty bullish sign, but not everyone agrees. Citigroup, for instance, has lowered its price target to $7, while Bank of America remains cautious with a neutral rating and a price target of $5.30. So, while the short-term outlook seems positive, with analysts projecting NIO to hit somewhere around $7 to $8, there's still a lot of uncertainty hanging over the long-term trajectory of the stock. As we look ahead, the big question is whether NIO can maintain this momentum. The company's focus on expanding its battery swapping network and increasing production capacity is a smart move, especially as they launch more affordable models like the Firefly brand. But with increasing competition and ongoing cash burn, NIO still faces significant challenges. Before we get into the exciting details, let me introduce you to Moomoo Financial. If you open a brokerage account with Moomoo and deposit at least $1 using the link in the description, you'll get a chance to draw a free stock worth up to $2,000. But that's not all. If you make a net deposit of $100 or more, you'll receive not just one, but 5 free stocks worth up to $2,000 each. And if you're really serious about investing, you can deposit $1,000 or more and get a whopping 15 free stocks, bringing your potential earnings to a staggering $30,000. So sign up now using the link in the description and get those free stocks. Now let's get back to the video. So where does this leave us? NIO's recent cash injection and strong order intake for the Onvo brand are positive signs, but the company still has a long way to go before it can claim true profitability. If you're already invested in NIO, this could be a time to hold and see how the next few quarters play out. But if you're considering jumping in now, make sure you weigh the risks carefully. At the end of the day, NIO remains one of the most interesting stories in the electric vehicle market. The company has shown resilience in the face of adversity, but it's still too early to tell if this recent surge will lead to long-term success. Keep an eye on their quarterly reports and any updates on the Onvo brand to gauge whether this stock is worth adding to your portfolio. Now, what do you think? Are you bullish on NIO, or are you waiting for more signs before making a move? Let me know in the comments below, and don't forget to subscribe to the channel and like this video for more deep dives into the hottest stocks on the market.